Hi everyone, I'm Serge Kilembi from Trading Wall Street TV, and thanks for joining me for this week Time to Trade the Markets, the US weekly reports. Here and now we're gonna analyze the markets using price action and technical analysis, but first let's have a look at some macroeconomics data and some news, and also we're gonna uh, look at the past month performance and macroeconomic data for the US. Okay, so here first of all we are here at Trading Economics. We gonna quickly have a little resume of what happened in the US at the state of the US economy now. You see GDP growth 1.4%, unemployment at 4.3%, inflation rates 1.9%, interest rates. You remember that earlier in last month in June, the Federal Reserve hiked the interest rate for 25 basis points, and so now we are at 1.25%. The balance of trading, US is still running a deficit. The government debt to GDP is 106%. The currency, the dollar, is still strong, nearly 96 point, and stock market still in market highs. We have resistance at 21,500, and the government bond yield, the 10-year note, is the yield is at 2.3%. So now let's move on and let's focus on the balance of trades. And as you can see here, you have the data for the deficits, and we expect the deficits to be going on, and that means that the US dollar will remain high. Okay, so for you guys who are trading the forex, you should really have a look at this particular indicator, because when you compare the balance of trades from the US, who does not have a physical economy, but you have countries like the eurozone. The eurozone is having a surplus. China is having a surplus. Countries like Japan and other stuff, because they're exporting goods to the US. So for them, it's better for those countries to have a weaker currency. Okay, so have a look at that, and that's just for you. Okay. And now let's have a look at the economic calendar for next week. What do we have? On Monday, we have in Japan the Tenkan Large Manufacturers Index for Q2. Next in China, we have the Caixin Manufacturing PMI for June. Japan, back again in Japan, we have the Consumer Confidence for June. In the EU, the European area, we have unemployment rate for May. And now back in the US, we have the ISM manufacturing PMI for June. And on Tuesday, back in Australia, we have the Reserve Bank of Australia interest rate decision. As you can see, 1.5%. The consensus and the forecast are the rates are going to remain unchanged. And on Wednesday, July the 5th, in the US, we're going to have the FOMC minutes, so the Federal Reserve meeting. And on the European side, they're going to go back and forth. We have the ECB non-monetary policy meeting. Okay, so now let's move on. Let's have a look at some news. First of all, here we are at Business Insider, in Market Insider, the portfolio. Next, we're gonna have a look at the charts, but now first of all, just have a look at what's hot, in the news. Here we have stock rises. What you need to know on Wall Street is what super quick get to what traders are talking about. And now over here, what do we have? Britain. Okay, we have Berkshire Hathaway. You see that now Berkshire Hathaway and Warren Buffett are the largest shareholders of Bank of America stock. So that's it. That's Renault for the car industry in France. Over here, what do we have? No, here talking about the stocks. Oh yeah, earlier this week, last week we had the Nike shares, Nike earnings. As you can see, the share price is rising, and that's what's hot, for the stocks, the best performing stocks. in for the Dow Jones, and here the worst performing stocks for last week over here for the Dow Jones Industrial Average. Okay, so next, what do we have? Some IPOs over here. Amazon as a secret weapon that is crushing the competition. You can read that particular article. 10 things you need to know today, but yeah, that's more on the share side. Over here. Commodities, yeah, oil. We still have oil, in the news, oil. So we're gonna have a look at that when we're gonna have a look at the charts. North Korea over here, and on the currency side, you see the pounds with the Brexit thing. Over here, Britain, and over here, one more time, Britain and Great Britain and the EU. And on the bond market, what you have, you see here, you have Mr. Gary Cohn. It looks like Goldman Sachs is going to make money on one of the most controversial trades of the year. So take a look at that particular article. Over here, Trump, and yeah, so that's it. So now we're gonna go. Now we're gonna have a look at Market Watch. Over here, what do we have? Micron Technology benefits from high memory prices and new phones in the fall. Okay, July the 4th, rich market all close. Yeah, remember that's on that particular day, that's a national holiday, so we don't gonna have much trading. Maybe some commodities and stuff like that. Over here in Europe, the market's gonna be open, but with less volume due to the close of the US markets. So now, US market headlines, German bonds. What more do we have? Yeah, central bankers and Trump. Here, red theme files with SEC to rise up 100 million via IPO. Dollar snap slide, but performance largely dismal for the first half of the year. Dow S&P 500 notched best first half performance since 2013. Here, Nasdaq books best first 6 months of the year since 2009. Stocks end mostly higher to book best half year gains in years. Okay, Nasdaq. Okay, so you see the all-time highs in the stock, best performing 6 months for at least a couple of years now, and so that's it. So now let's see some news over here with the on the cryptocurrency side. See Ethereum still high, now surpasses Bitcoin, so now you see here on the price, the volume, and the number of coins available. So the number 3, the top 3 cryptocurrencies are number 1 Ethereum, number 2 Bitcoin, and the third is Litecoin. So this is that particular page over here is a World Coin Index, so check it out, and that's it. So now let's go to the charts and let's go finally to the stock markets. Okay, sorry about that, I want to close the ads. Over here, what do we have? That's the S&P 500 sectors map. You see the best performing sector for this week was the financials, technology in red, services maybe up like 80%, of the companies are in green, but the big players, Amazon in red, Starbucks over here, McDonald's, Comcast are in red. Over here, what do we have? Netflix in red, basic materials, great week, but for the major, ExxonMobil and Chevron in red, healthcare in red, consumer goods in red except for Nike due to the earnings. Here, industrial goods and utilities, utilities in red, totally red, and over here industrial goods like 50-50, So now let's have a quick look at the ETFs. You see the indices in red. Over here the sectors, healthcare, real estate, technology, utilities, consumer non-cyclicals, over all of them in red, energy green, financials in green, consumers cyclicals up. Oh, I'm sorry, I want to close the head. Over here industrials, yeah, rising, and basic materials, down but a little bit. Global miners, as you can see here, in red except for dusts and GDST JDST. And over here, what do we have? Commodities, gold in reds, crude oil in green, US governments, US government. Here, the fixed income in reds, corporate debt over here up, but that's not so much. And what do we have? Indices in red and the VIX obviously in green. Okay, so now let's move on. Let's have a look at the charts. So now here we go. First of all, we're gonna begin with the Dow Jones Industrial Average. We see the uptrend channel, and now let's have a look at the price action over here. What's happening? Okay, I'm sorry. Okay, yeah, there you go. I'm gonna amplify the charts. Here, still at the all-time high of 21,500. Bearish week. Close at the 4 weeks moving average. You see, we're trying to reach the 8-week moving average, but we rejected it. So now we are here. But I'm still expecting more downside over here, So maybe next week gonna have a open over here at 21,350, and then maybe trying to go lower, because over here what you can see, that particular pattern, long tails, that means that's a tweezer top. So that's a bearish pattern. So now we have another resistance over here, and then we have that particular range, that spread of 70-80 points over here. So I'm expecting more move towards the downside. You see over here we have a channel, the resistance and the support, and we are in the lower half of this particular uptrend channel. So we're gonna remain over here at the channel's supports. Okay, we're gonna interact over here, maybe come bounce over here at 21,200, and then bounce back and go back higher. Okay, that's for your Dow Jones Industrial Average. Okay, now let's follow over here. What do we have? Over here we have the diamonds, exactly the same thing. That's the Dow Jones Industrial Average ETF. And over here, what do we have? You see a rejection over here at the resistance of 215. Bearish week. We're starting to see the pattern, the same pattern, that's repeating, a good evening pattern, close right at the 4 weeks moving average, and now we're trying to go down towards the 8-week moving average. Okay, remember we have a gap over here at 205, but now I'm expecting more move towards the downside. If we don't have signals, buying signals, for me it's gonna be more bearish. So it looks like, yeah, for me more bearish. If you can go lower than 212, we're gonna go back here towards 211. Okay, so that's for the diamonds. Now let's have a look over here at the Nasdaq 100. You see a lot of talking about tech stocks, and over here what we see a rejection. You see that's your uptrend channel, resistance over here. So the resistance, the support, and then boom, here resistance, and now we have strong resistance at 58.80, and now we are rejecting the resistance. So we need that correction, in tech stocks, because the bull run was so heavy, that particular bullish sentiment, it lasted too long. We are overextended. So now I'm expecting, more move towards the downside. So just take a look at the bearish bars, that bearish candlestick. They are powerful candlesticks. So now when you look over here, we have a convergence between the 4 weeks moving average and the 8 week moving average. So now I'm expecting the 4 week moving average to go lower, to cross, and to go below the 8 weeks moving average, and to go after the 13 week moving average over here. So that means more bullish, more bearish movements. Okay, I'm expecting a continuation, and we are going maybe to fill this gap over here. You know, I'm expecting that particular move. That's your 21 week MA and 26 week MA. So now I'm expecting here more move towards the downside. So here, that particular one for me now it's red, and what I'm expecting this. Okay, like this, bam. Okay, and then maybe over here like that, and then maybe over here a little bit thicker, and then maybe over here it can go like that. Okay, so more move towards the downside over here to fill the gap, and then boom, going up. Okay, remember, and take a look at this. The close is at the 13 week moving average. So if we have a continuation, another bearish candle like that with strong price fluctuations towards the downside, so we're going back to the 4400s. Okay, now let's continue. Now we're gonna have a look at the next one, next chart. Next chart over here is gonna be your Nasdaq ETF, the triple Qs, the QQQ. You see exactly the same thing. It's happening here. Okay, so let's break it down quickly. What do we have here? Okay, so now you can see the resistance over here, 144, 144, 143.50, and see here the stairs, downstairs, you know, channel, you know, boom, we're going to the downside. Okay, also we have like a kind of a triangle, you know, that's your resistance over here. I was expecting more continuation, but no, you know, exactly the same thing as the Nasdaq. We're gonna go back lower over here to fill this gap. There's a huge probability for that to happen, and then boom, bounce back over here. So over here we're gonna have to wait for a bullish confirmation, buy signals, and then boom, go back higher towards the resistance, and then boom, break, and then go higher. As you can see over here, the convergence between the 4 weeks moving average and the 8 week moving average over here. 4 week moving average going lower and going to chase the 13 week moving average over here. You see the price, we have a close just here at the 13 week moving average region, and then boom, we're gonna go lower. If you have a continuation, you know, if next bar next week is bearish, we're gonna go lower from 13 week towards 21 week and then 26 week. And if you take a look, that coincides here with the gap. So me, I'm expecting the markets to go lower, the Nasdaq to go lower. Okay, so now let's proceed. That's all the probabilities for your Nasdaq, the indice, the index, and for the ETF. Okay, so now let's continue over here. The S&P 500s. Let's have a look at the charts. You see, we're still bullish, but now we are at a point where we can no further go higher. Resistance over here at 24.45. You see, we have rejections, and bearish candlesticks. So I'm expecting the same thing over here, more moves toward the downside. Over here you have like a bullish flag over here. You see your resistance, your support, your resistance area over here, and now rejection of the resistance, and we are going back towards the support. Take a look over here. It's obvious we have a gap also, and that gap coincides with the 26th moving average, And take a look over here, the 4-week moving average, it's going after the 8-week moving average, so we have to expect sooner or later we're gonna have a convergence of these two particular moving averages, and then more move towards the downside. I'm expecting the 4 weeks moving average to go after the 13-week moving average over here at the 2400s, and then, you know, interact over here with the 21 and 26 moving averages, and then bounce over here at the channels, you know, that's bullish flag supports over here, and maybe bounce back or go lower to fill the gap over here. So I'm expecting more moves toward the downside. So remember, over here we have a pointer, we have a bearish pointer, so that's key, that's a mark, that's a signal. Maybe the markets can come that close to the 2350 price range. Okay, so that's it for the S&P 500. Now let's take a look at the SPY. So I'm sorry, the computer is a little bit low because I have too much charts over here, but bear with me, you know. Okay, now here we go, here we go. Okay, I'm sorry. Okay, now we're good. That's the S&P, no, that's the SPY weekly chart. You see over here resistance, rejection of the 245. We're rejecting those prices, and then, you know, we are in an inside week candle for 1, 2, 3, 4 weeks, like a month. You know, we were being trading in a range, going sideways. And here, first of all, what do we notice? We notice we have a close below the 4-week moving average. Now a close at the 8-week moving average. And if you have continuation, you know, as market here, you can go lower towards the 13 weeks moving average. Take a look over here. We have also your gap, your bullish gap over here, and that coincides with the 26th moving average, 26 MA over here. Those are simple moving averages. Okay, so maybe we can go lower. Take a look also at the pointer over here. So maybe we can go back all the way down from 240 towards 235. Okay, so I'm expecting more move towards the downside, more bearish movement, more bearish candles over here. Okay, that's it for your SPY. Now let's move on, and now let's have a look at the VIX, the volatility index. You see the VIX is still low. You see, take a look at the last week, huge spike over here, that huge pointer, you know, the same as here. So a lot of volatility, and we are still below 12. You see, we're still trading in a range despite those spikes over here. You know, that spike reaches that's your 104 moving average, and this one, the green one, is the 208 moving average, 208 weeks. That's your 52 weeks moving average. And over here we have 13, 21, and 26. And over here we are above the 4 and 8 weeks moving average. You know, those two are in a convergence. But but the rest of the moving averages are going sideways, you know, horizontal. So what does it mean? That means that we're gonna go sideways. We're gonna be moving, fluctuating in a range between 10 and 15. So expect more volatility. So you can see if we see the VIX going higher, that means that the markets are going lower, you know, and fill those gaps. Okay. So that's it for the VIX. VIX is still low, okay, but expect market volatility. Now let's proceed. Wait a second, please. Bear with me. I'm sorry about that because I have a lot of charts. We have like 20 charts, so I'm gonna try to run and to give a comments, but really very fast, but with good details, you know, about the price action. So now that's your XIV, and take a look at the XIV, still in record highs, but over here take a look at this. We have resistance now, and we have a huge pointer. We're gonna analyze a little bit more about this pointer and take a look and see what it means. First of all, we rejected the 87.40, close below 86. Now we are at 85, under 85.50, and take a look at the pointer. Still above over here, you know, close above the 4-week moving average. But take a look at the pointer. First of all, notice we have a gap, bullish gap over here first, and that's the second. And take a look at the huge pointer. 4 weeks moving average, 8 weeks moving, 8 weeks AMA, 13-week AMA, and 21-week AMA. We'll go all the way from 84 towards 74. And if the pointer is right, and if this pointer is a right bearish signal, a short sell signal, so we're gonna see the markets going down starting next week to fill, first of all, this gap, and secondly, and next, this gap. So I'm expecting the markets to go lower, more bearish sentiment, more bearish movements like this. Okay, boom, like that. So expect that, you know, in the market. So be cautious, be prepared, and need to have your if you're gonna short the market, need to have your shorts in place, and strict risk management and all that stuff, and make sure you can capture some points. And if you're gonna short the indices or short the ETFs or be short some companies, so make sure you gonna profit from that, and with a lot of precautions, you know. Okay, so over here we have like that pivot point over here, and that's also your resistance. So I'm expecting to see those type of movements. Okay, so that's it here for your XIV. So now let's move on. Wait a second. Okay, because I'm saving those charts. And that's your XIV. So for this part it's okay. So now let's move on, and over here we're gonna take a look at the Russell 2000, and over here you can see the Russell 2000 still, you know, you see that bullish trend line, you know, the interaction over here, the support 2 times, supports 3 times, and now the 4th time at the support. So now let's have a look at the price action and the technicals over here. You see we're forming like a type of wedge, you know, and that's a type of ascendant triangle, but we need to remain cautious because the markets can go any direction. Over here, take a look at this large tail, long tails over here. That's a signal, that's a bearish signal, because we are rejecting higher prices. We are rejecting the 1440. And now take a look, we have inside week candles, and over here what's the formation? You can clearly see that's a triangle. Okay, I'm gonna duplicate this one, I'm gonna clone, and you're gonna see what I mean by a triangle. You have a triangle, there you go, that's your triangle over here. So now what I'm expecting, I'm gonna clone this one. If that pattern is confirmed, and take a look, we already have a close below the 4-week moving average over here, so I'm expecting more moves towards the downside also, and maybe we can come back here. Take a look at the spread, huge spread, that's volatility between the 4 weeks moving average and 8-week moving average. Take a look over here, we are at 1414, and over here 13, no, let's say 1400. Okay, so that's 14 points towards the downside, you know, huge spread, that's volatility. So now I'm expecting if the markets go down, take a look at the long tail over here. That's not the first time, 1, 2, 3, 4 tails. This one is even bigger. So now I'm expecting the markets to go much lower. Okay, so expect more move towards the downside, and take and also remember we are in a triangle, and that means inside week candles also, you know, 1 2 3 weeks, like a month, we've been trading in that particular range, you know, with huge spike, huge volatility. You know, the spikes in the fluctuation price fluctuation between 1393 and here 1435, you know, that's huge. That's almost 40 points, you know, of volatility. So that's huge, you know. Okay, so that's it for the small cap, the Russell 2000. And now let's have a look over here at the IWM. That's your iShares Russell 2000 ETF. Also the same thing, you know, remain bullish, all-time highs, resistance at 142. And now let's take a look. Let's have a closer look at the price icon. You see, same trading range over here, price fluctuations. Your resistance is at the highs, you know, when I'm talking about the highs are at 142.95, but the closing points are at 141, 142, and the lower points at 137, 138. But you see, we are still in a inside week candle. Well, that one is past. So now what I'm expecting markets to go lower like this, you know. I'm expecting those types of movements, you see. So if we go lower, I'm going to be looking for some shorts over here. Okay, sorry, I'm going to remove that. Don't need that anymore. Oh, okay, that's it. See? So already here, close at the 4 weeks moving average. Also, like in the Russell 2000, see the spreads between this particular moving average, that's your 4 week moving average, and this one, that's your 8 week moving average. That's huge, and that's volatility. You know, we have like like 50 cents, you know, of price range over here, and that's it. And your 30 moving average, it's over here. So I'm expecting maybe the price to go lower from 141 towards the 138.50. Okay, if we go lower. If we remain sideways, we're gonna remain sideways, and maybe you got to be cautious, guy. We are trading between that range, you see, 142.50 and 139.50. So that's volatility over here. Okay, but if you go lower, if the market decides to go lower, you know, with a complete bearish candlestick, so now I'm expecting the market first of all to reach the 139.50 and then go lower 138.50. Okay, so that's it for your IWM. Next, what do we have next over here? Now we're gonna take a look at the fixed income. We're gonna take a look at the bonds, and that's your treasury notes futures, the 10-year treasury note future. You see over here we had a bearish week. Okay, you see here that particular bullish uptrend channel. You see resistance, support, resistance, support, resistance, and now we are at the support. You see over here we rejected it. That's your, here in purple, that's your, no, in pink, sorry, here, this one in pink, that's your 52 weeks moving average. We rejected it with a resistance at 127. Now we are lower, we go low over here. That's your 104 moving average, 52 weeks moving average, 208 moving average, your 4 moving average close below, 8 week moving average close below, 13 moving average close below, and look at it, we have support with the 21 week moving average and the 26 moving average. So now if we go lower, I'm expecting this. If we go lower, I'm expecting we're gonna come back over here, maybe the 124. Yeah, that's gonna be a first target. Okay, 124 over here, boom, first target, because we are at the channel support. That's a critical level, and if you go below the 125.50, boom, we see another bearish candle like that, boom, we're gonna go lower. So what does it mean for the yield? If the price of the 10-year treasury note is going lower, that means that the yield is going higher. So now let's have a look at the yield. You see the bond price and the yield price always are going separate ways on different direction, and that's it, on the opposite direction. Okay, so here you see the bond price was in the rise in the bullish channel, and over here you see now we're going lower, but as you can see the yield has been rising, and that's a type of bullish flag over here. Okay, so I'm gonna see if I can do just like this, quickly. You see, like this, these two candles, they cancel themselves, because you have a bullish bearish rejection, bearish reversal. Okay, so the bearish one cancels the bullish one. Okay, that's your bullish flag. So you can see an A, B, C, and then D. Now if the bonds prices continue to fall, but that's a strong bullish candle, like this one. So now what we can expect over here, we can expect more moves towards the upside. If we have continuation, look for the bonds to go high, the yields to go higher towards 2.6%. Okay, so now you see over here we have in pink we have the 52 weeks moving average acting as support. We have also the 104 moving average acting as support. Over here we have the 208 weeks moving average, and we break that. We break above that, break above the 4 weeks moving average over here. 8-week moving average, 13 weeks moving average. You see convergence between the 13-week moving average and the 208 moving average, and now we see convergence. In sooner we're gonna see a convergence, because you have the 4 weeks moving average going after the 8-week, 13-week, and 208, and so that means a more bullish movement. You see here, over here, what do we have? We have the 21-week moving average and the 26 moving average acting as resistance. So if we go higher, and if you can break above that particular trend line, that's resistance over here, we're gonna go higher towards the 2.6% of yield for the 10-year treasury bond. Okay, now let's continue. That's your yield. Now let's have a look at the 30 years treasury bonds, and that's exactly the same thing. You see over here, that's a bearish channel. You have like a flag over here, that's your support, and now we're moving higher, but as you can see, the bond price are going lower. You see here resistance, support, resistance, support, resistance, rejection at the resistance, and now we're back at the support. So now let's have a closer look at the price action of that particular region. So what we can see over here, take a look at that. You see that's your 4 weeks moving average, close below the 8-week moving average, close below the 13 moving average. Okay, but now we are closer to the support. At the support, what do we have at the support? We have the 21 weeks moving average, and we have the 26-week moving average. Lower, what do we have lower? Lower, we have the 208 moving average. So I'm expecting this. If we go lower and we break below the channel's support, and if we have a continuation, in the next weeks and the weeks to come, in July and maybe in August, continuation of that particular bearish candlestick over here, maybe we can reach the 21 and 26 moving averages, and then boom, go lower. Take a look at this. That's a huge spread. That's volatility. So I'm expecting the bond price to go lower, or maybe you can come here, come closer, and reject lower prices and bounce back up, and confirm that particular bullish channel. Okay, so yeah, I'm gonna see that maybe you can come over here, bounce back here, and come back here. So that's it. That's all the probabilities. We don't know where the market is going. We analyze the markets, we set up our probabilities, and we're going after the money. We're gonna put on trades, we're gonna bet on this towards the downside, towards the upside. We're gonna hedge our positions, and we're gonna have a good risk management. And if it goes in our favor, but we're gonna just lower, or we're gonna tighten our stops and take profits all the way to the downside or all the way up. Okay, that's it. That's how we do it. Okay, so now let's continue. Okay, that's your 30 years treasury bonds. Now let's have a look at the yields of the T-bonds. If the price of the bond is trading lower, going lower, that means that your yield is going higher. That particular one. I don't need that anymore, so I'm gonna erase that. Okay, that's it. You see, exactly the same thing, but over here we have a long bullish flag over here. I'm gonna mark that. Yeah, I'm gonna mark that like that with a channel. That's like that, and boom. You see, like that. Okay. See over here, bam, bam. Oh no, cancel. You see, bam, bam, going down. And now what I'm expecting, since we're here, you see, I'm expecting continuation. But let's have a closer look over here, because we have a lot of things are going on over here. First of all, what do we have over here? We have in pink 52 weeks moving average. You see, that's a bearish engulfing, bearish rejection. That's bullish. That's a bullish rejection. You see over here, bullish reversal, and we're going up. Okay, 52 weeks moving average, 104 moving average, 4 weeks moving average, close above. You see interaction over here with the 8 weeks moving average. So now I'm expecting more moves towards the upside. Okay, so take a look. 8 weeks, 13 week, 21, 26, and 208. So now I'm expecting the yield to go higher. If the bond is going lower, the yield is gonna go higher. Okay, so that's it. Same thing as we analyzed for the 10-year treasury notes. So now let's proceed. Let's continue. Now let's have a look at DXY, the US dollar index, and that's a bearish week for the US dollar. You see over here we have your 208 weeks moving average, and then boom, maybe you can go lower, but the dollar is still strong. We still have a strong dollar. We are trading between a range. Your resistance now is at 103, and your support is at 93. We have a 10 point range, trading range. So that's huge. Okay, but now you see, since it reaches the 103, what are we looking at? We are looking at bearish sentiment. You see in A, B, C, D, as a market here. No, A, B, C, D, and now another A, B, C, D, and now another A, B, and maybe we're going lower. I'm expecting the dollar to go lower to reach 93. So here, I'm gonna put it down like that, so you see my targets. And at this time, when you're gonna reach 93, you're gonna have your 208 moving average also reaching at 203. So that's a good converging point. That's a critical area. Okay, so as you can see here, now I'm expecting what I'm expecting. I'm expecting a continuation. Okay, or see over here we have like that A, B, C, D over here, that pivot point zone over here at 94.50. So maybe first we're gonna reach that particular point, 94.50, and then boom, more moves towards the downside. Okay, see over here I was expecting the dollar to go up, but it didn't happen. Maybe we can come here and bounce from here. Okay, so first of all we have that particular move. You see, like that. And in the short term we can go from here and reach that particular level over here, 94.50. No, 94.50. And if it goes lower, 93, maybe come back here, bounce, or come back here and go here and bounce. Okay, that's it for your dollar. So I'm more bearish bearish on the US dollar. Now let's have a look at crude oil. And oil is going up. You see, that's the perfect opposite of your US dollar. So you see the dollar is going down and this one is going up just for this week. Okay, so you see over here oil reaches 54 and then it started to go down, you know, in that particular bearish channel, you know, resistance, support, resistance, support, resistance, support, and that's your lower highs and lower lows. And we are back here, we are back at 43, excuse me, 43. And now lower, what do we have lower? We have 40. But take a look this week, what happened this week. That's your bullish reversal, that's your bullish engulfing candle. So now I'm expecting more moves towards the upside. Take a look over here, 104 moving average as resistance, boom, close above. 4 weeks moving average, close above target. 8-week moving average, 52 moving average, 52 weeks moving average, 13 moving average, 21, 26, and that's your resistance, your channel's resistance. So now I'm expecting oil to go up. Okay, from 46 maybe towards 48. That's a $2 gain, and next another $2 towards 50, and then 52, and then 54. But it's not gonna happen in 1 week. You know, we're gonna struggle, you know, to go there. It's gonna be painful. So you know, you're gonna have to be smart, you know, about your trading if you're gonna trade oil. So know how to trade that, and how to have your good stops and good take profits, and take profits in the run, you know. Okay, now let's proceed over here. So now what do we have? Yeah, that's it for your crude oil. So now let's move on. Next, now let's have a look at metals, precious metals. And here you have your gold. Take a look at the big picture. You see over here that particular channel over here, support, resistance, support, resistance, support, boom. And down here we are starting to go lower. We rejected the 1295 and 1300s, rejected that, and now we are going lower. You see, bearish movement, more bearish sentiment, you know, huge rejection over here, and then boom. Now what can we see over here? Here, what do we see? We see the 4 weeks moving average at convergence, as you know, past convergence over here with the 13 moving average. Over here you have your 52 moving average, your 8-week moving average. Down here you have your 21 moving average. Here you have your 26 moving average and your 208 moving average acting as resistance. You see, I'm expecting sideways movement, and then if the market decides to go lower and we decide to have a continuation, you know, for this particular bearish candle, I'm expecting more moves towards the downside. Okay, so we can see stuff like something like this, you know, may happen. You need to expect more moves towards the downside, you know, for gold. Okay, something like that. the 1220 and maybe the 1200s for gold. You know, if you have, you know, the highs, lower highs and lower lows, maybe that's a new channel. So I'm expecting gold to go lower if you have a continuation, okay? Because that's a strong candle. First of all, go lower towards the 1230, okay? Now let's have a look at your GLD. What's happening with the GLD? And the same thing, you know, bearish candle. You see over here, that's a type of triangle, and if you break lower, you know, you hear me, I was expecting more move towards the upside, but no, it didn't happen. The market goes south, and now I'm expecting this. You see over here, you have your resistance, and that's that particular moving average, and that's your 104 weeks moving average. So that's what I'm expecting. Now I'm expecting to see this continuation, and boom, you see the point over here, and that's your good morning, you know, type of pattern. So now the GLD can trade lower and going back to 115.55 over here, support, going back to that support. And if we go lower, 114.50 over here, okay? But first of all, in the short term, like in a week or two, I'm gonna trade lower towards 116. That's what I'm expecting, okay? Continuation in the downside. And have a look over here, highs, lower high, low, and mark another lower low over here, okay? To respect, you know, that particular channel, you know, maybe you can go like this, see, bam, and this one, bam, and if I clone that, I'm going to take this one, and it's going to be something like that, you know. So now you can expect something like that, okay? There you go, there you have it. So that's it, okay? More moves toward the downside for the GLD. And now let's have a look at silver. What's happening with silver? Exactly the same thing, you know. Silver, it's already, first of all, let's have a look at the big picture over here. So now you can see that perfectly, you see. Since then we go lower, and that's a particular pattern. That's a big A, B, C, D, you know. Let's do something very quickly. If I'm doing this, I'm doing that, so I'm gonna take this, and this one I'm gonna, this is pure technical analysis, you know, and that's it. If I'm going to do like this, your probabilities, that's a B, C, and maybe a D lower, you know. What are we doing? We are going back here to the support of 1300. 70, 40, yeah, 40, yeah, 40, $14 an ounce, you know, for silver. Maybe we are going back there, okay? But in the meantime, what do we have over here? Boom, you see? Now here we have a rejection. We are rejecting lower prices, but we are still bearish here under that particular moving average. That's your 104 moving average, and maybe that's just a temporary, you know, sideways movement. We are rejecting, you know, over here we are rejecting the 1625, but maybe now next week we can trade lower over here, and boom, going down. You see, that's your downtrend channel's resistance, that's your support, and maybe here next week, what can we see? We can see a move like that, you see, because over here we already be, you know, in the channel's you know, supports, resistance, and then boom, rejecting that, and from here maybe I'm expecting more moves towards the downside over here. So that being said, still, and the market is still bearish, for silver. Okay, now that's your silver. Now let's have a look at the SLV, your silver ETF. You see exactly the same thing over here. Bam, bam, bam. And now, over here we have bullish candles, in a bearish sentiment, but we have bullish candles, So that, what does it mean? It means that we can see that type of pattern repeated over here. You see bearish, two bearish candlesticks, one doji over here, indecision, and then boom, 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 bullish, bullish, bullish. And over here, two bearish candles, indecision, dojis, and then boom, maybe we're gonna go higher. But over here, that's not happening. First of all, let's break it down. Here you have your moving average. That's your 104 moving average over here, acting as a support. Close below, and then boom, you come go back up, close. But here, take a look at what happened. That's your 4 weeks moving average. We rejected it and then go lower. That's your 8-week moving average. We have a convergence over here. And take a look at the 13 moving average, 21 and 26 moving average, trading going like sideways, but the other ones are going down also. So maybe that's a pivot point over here, and on that particular pivot point we're gonna go higher from here, or maybe going sideways. But if we have a close above the 4 weeks moving average, that's a bullish signal, like here, close above the 4 weeks moving average, after reaching that particular point, that pivot point over here, that support. That's the same thing over here. So we don't know. We remain still at the channel's resistance. We can come here, go back to the channel's resistance, rejected it. Here we're gonna have, at this time, we're gonna have like in the middle of July, you're gonna have your 13 moving average over here at 1650, and then boom, 1615, yeah, over here, and then boom, we're going back lower. Okay, and now let's close this week's reports with the cryptos. And now, first of all, Bitcoin. You see Bitcoin lower since the $3,000 high, and then we 3 consecutive weeks to the downside. Huge spike, huge pointer. That's a great pointer, below the 4-week moving average, below the 8-week moving average, and you see the spreads between. That's huge. A lot of volatility, from 2700 towards 2100. That's huge. You see over here, you have a convergence taking place. The 4-week moving average converging with the 8-week moving average. And you know what happens when the 4 weeks moving average crosses below the 8-week moving average and going towards the 13 weeks moving average towards the 2100. That's a lot of volatility, and that's a bearish signal. Okay, so over here I'm expecting that. You see, we already opened here, so we are still below the 4 weeks moving average, so I'm expecting more move towards the downside. So I remain bearish, on cryptos, especially on Bitcoin. For now, don't own any. Well, I'm owning some Bitcoins, but I'm not going to add to my position, to my holdings of Bitcoins. But what I'm doing instead, over here in Europe we have CFDs. So now what I'm doing, I'm shorting that. I'm trading with derivatives, in this case that's CFD. So I'm gonna short the CFDs, the Bitcoin CFDs, and I'm gonna benefit, and I'm gonna profit from the downside. That's it. So in that particular case, I'm hedging my my holdings in real Bitcoins, let's say. Yeah, I'm hedging the Bitcoins I own in my wallet and with CFDs, in my CFDs trading account. So that's it. That's what I'm doing now. Okay. Okay, and now you have your ethos, your Ethereum, and let's have a look. You know, you don't have a lot of data, you know, in on the weekly side, but you know, same thing. You know, after the past 2 weeks ago, we had a huge crash over here. You see, you only have information for the 4 weeks moving average. We're already trading below, and now you see here we have a huge pointer. So that's a signal for me. I'm still remaining bearish. I'm remain bearish, you know, on Ethereum. You see the height, the max high are at $420, $420, and over here you have $270. So that's a $50 range over here, and since then, boom, it's selling off, you know. So now I'm expecting Ethereum to go back to $200. So same thing over here. No, I do not own Ethereum, but I'm trading Ethereum. I'm gonna short Ethereum with CFDs. You know, that's the benefits of having derivatives over here in Europe. So I can leverage myself, and I can shorts, selling shorts, buying, and for the moment that's shorts. You know, so I'm gonna short that thing around. If I see it's trading like around 245. You know, 250 to 45, boom, I'm gonna place an order, and bam, and trying to benefit. I'm gonna bet, yeah, I try to benefit for a quick sell, a short sell over here for 250 towards 225, maybe towards 200. So that's it. So the plan is short over here. And if it comes towards 255, lower my stop, put my stop at even, and then let it go down. You know, I'm gonna write it down, and if I see it reaches 200, but that's great. You know, that's a great trade. Okay, so people, thank you very much. So that's it for this week, for this trading week. So hopefully, and I hope that it helps, and have a great week, and I'm gonna see you guys next week. Okay, thank you, bye.